Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our analysis on the gold market. So in general, the performance on the Friday was correct, and you can see that gold is just ignoring the payrolls numbers. So numbers were good actually, and even inflation in the wages have decreased slightly. But anyway, gold is going higher. So in the current circumstances, it's understandable. And while the many investors are thinking what will happen to financial assets in Europe, what the European Central Bank will do, what the Fed will do, the gold just enjoying the supportive factors, despite how cynic that might sound. But actually, the geopolitical tension in combination with the easing of the inflationary pressure in the United States and turning real interest rates back down. So if we'll take a look, for instance, on interest rates, real interest rates, as you can see what has happened. So this is 30-year Treasury inflation protection securities. So you can see it turns back in the negative territory, and that makes really big support for the gold market. That's why our medium-term view on the current situation positive. So we do not see currently really big risks for the gold, and that is confirming by other investors. So as we discussed in today's weekly report and put some opinions of other traders, many of them think that gold exceeds the 2000s in the near term, and probably this definitely should happen. It's by many reasons. So we have taken in-depth analysis of the fundamental picture in the report as well. Also, a lot of things we have said about financial moments in recent report of the Forex market that we have prepared yesterday. So if you're interested with the fundamental background, you could read it. It's highly informative. So you just will understand the overall background and why we think that gold should go higher. So we think that the reaching of the nearest monthly targets around 2075, 2060 is just a question of a few months probably, maybe even faster. Also, ultimately, if you'll take a look at really big picture on the monthly chart or even using the quarterly chart, you'll see that gold performance is really bullish. And with the ultimate scenario, because currently nobody could bet that gold market could show the fast acceleration up, because nobody could say what will happen in geopolitical terms. Now we know, you know our position, that we think that geopolitical problem stands for a long time. And we think that the Ukraine situation will be just the first brick in the wall. It's just because Russian conditions and claims to move the North Atlantic Union borders back to the 1997, they are not denied from these claims. And what will happen next? We just could gamble about it. But probably it should last for some time. Since the many capital currently is flowing to United States, that simultaneously should trigger the demand for United States assets, which is the bonds. In particular, increase the consumption in the country, which should provide the support to the economy. And problems that the United States economy has currently should ease a bit. We think that outflow from Europe should be around 1.5 to trillions euros or dollars, which is actually currently not a big difference, should support and provide support for the United States economy until maybe till the end of the year, maybe a bit longer, before the old problems with the inflation starts to come back on the surface again. Currently it will be disguised a bit with this big money coming to the United States. And that's why within the nearest half of the year probably, gold really could get the significant support and could climb higher. So ultimately, as I said, the target that we consider in the longer term stands around 2000 and $600 per ounce. So this is our long-term estimation, and we don't think that it's actually is impossible to see. So in the shorter term, you could see, first of all, here on these interest rates that the inflationary pressure is easing. So the same thing you could see in treasury bonds. So here was some relief, as it was some actually easing of the geopolitical situation in terms of the lack of news. So Russian military operation is still going, but that is turning to some routine in the news, and market stops to show the aggressive reaction to it. All sanctions have been imposed already on Russia, so here is also not many news. Bonds trying to show the pullback. But even despite the good payrolls, even despite that Fed intends to change rate only from 25 points, as you can see, interest rates has dropped. So this is also a supportive factor for the gold market. That's why in the shorter term, despite that we see on a daily chart that market is overbought a bit, so you can see this hits this level, we still think that major reaction to the downside, or at least some tactical pullback, probably happens once market hits near around 1975, 1980. Because here we have some weekly targets, we have the grabber that should be completed once market will grab the stops above this top. And also we have some intraday targets. So if we'll take a look at the hourly chart, we have this ABCD with the OP around 1984. We have this XOP with this pattern, this butterfly as well. And all of them stands in the area between the 1975 and 1984. 84 target might be hit once the stops will be triggered. So just add some fuel to momentum, and market could show some fast spike just to complete the OP. Hardly market will stop here for long term. It's just because you can see that market is overbought. More probably there will be some spike and then return it back down. If you would like to take the long position on the gold, probably it makes sense, at least from a technical point of view, to wait when this major reaction on this target starts. So once market will, market will hits this target and starts reaction after the target, that might be the opportunity to go long. Currently, in this point, well, it's not very comfortable to take the position because market stands near the target and the pullback chance is very high. Market is overextended. It stands at overbought. So it makes sense to consider pullback a bit later when the targets will be hit. For taking the scalp short position, guys, here we take the conservative position. In the current situation, we think that risks with the short positions, even on the intraday charts, overcome the possible benefits. And if you're, have enough confidence and you feel free to, will feel comfortable to doing these trades on intraday charts, that's not forbidden, of course. But from the conservative point of view, this is not a good idea. And that's why we are not considering currently taking any short positions by far. On the 4 time frame chart, finally, yes, we have this butterfly with the 2000 target, but currently it seems that for a short-term perspective, it's a bit extended target. That's why currently we are not considering it. And it's just because of the overextension here. So we think that within the few sessions in the beginning of next week, it would be better to focus on the 1975-1984 target. And 2000, it will be already the next one. So that's our view on the gold.